like that. Okay, I do have a viewer. Okay, but it's not even anything. Okay. I guess I'll just go and get the link myself, since... Make sure my mic isn't muted. It's not. Okay. Okay. So, here to explain the indicator, I'm on a 4-hour chart. I'm going to go with AAL, since I'm long that currently. So, you see the black bars and the white bars. I have the actual graph hidden because it's not much help to me at this point. I just kind of reading the price action with these MAs or these EMAs, and then the Ichimoku baseline plus the indicator. So if you were to trade any kind of pattern and then watch what happens after the indicator signals something, you note that generally it's in the right direction after a pattern has completed. In this little area here, it goes down, it goes up, down, and then when this white candle comes, it just goes down. So it's kind of a false signal. And why is that? Because it was a back test of this black candle here from this sort of it's not a rising wedge, it's like a bear flag. You got the pole here, comes up, breaks down that big black bar, and then it comes up, retests the breakdown, and prints a false candle. So you can't trust every white candle that'll go up or black candle that'll go down. But as you see, then the next day it gaps down and goes lower into this chop area again, which then it spikes up on earnings and comes down the next day on the coronavirus news. And then a black candle prints down here, and it was a false black candle because obviously it didn't go lower. But that's kind of the catch-22 with this, is that yes, it does signal a move coming one way or another, but you cannot just say every black candle is a sell signal and every white candle is a buy signal. But see, if I take this 4-hour chart here and I just draw a trend line going up, you see that this black candle breaks it, and then it's just down, 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 down. That paired with using the baseline on the Ichimoku cloud indicator, instead of having all of the Ichimoku stuff here, all this stuff that kind of makes a mess, the only thing that's important in my analysis is the baseline. this red line here, it's kind of riggedy. It's very indicative of a move going a certain way. Let me see, just make sure. Okay, 3 whole viewers, sweet. Good thing it's recorded. So yeah, I mean, you get this this breakdown after a black indicator candle, and then it kind of chops sideways a little bit, looking like a flag, before this big red candle comes and breaks it below and closes below the baseline at 29.60 or 29.70. Goes lower all the way to 27.80, so about a 10% drop from there, and comes up and retests the baseline, but it never breaks over it, not even a little bit, and then it falls lower down to 26, all the way from 29. Actually, at that point it's about 10%. Here it's about 5%. And then you get the white indicator candle, which if you drew the trend line from all the way up here, you can see, using closing prices only, which these are closing prices now. So all the blue line is closing price. You go back to candles, white indicator candle breaks above it, which is the first signal that it's going to go up, and then you get the white or the green candles closing above the baseline. So let's say you buy here at 28.20, you ride it up over these EMAs up to 29. Even if you rode it up to the top here, $29 from 28.20, that's what, 70 cents, about 3%, like 3% gain, and in options that's about 40% on a monthly contract. So it's really just about waiting for your setup. You can't just play every candle, you can't play every trend line break. You gotta kind of have several indicators, in my opinion, to say, okay, it's time to buy here, it's time to sell here. So I'm long AAL right now because of a few different things. Just seeing on the weekly here, we've got a white candle over the baseline close, which the last time that happened was back here, but as you can see, it was printing a double bottom, so it's kind of a false breakout. Also, if you were to draw a trend line, it's not really, that's kind of just flat. So you draw this trend line now using closing prices only, and you got a clear break above there. So that's certainly going to move up. I still bought a month out. Okay, I just hit F12, my bad. I'm going to have to rip that key off my keyboard. Okay, so we're clear. This is going to go up. If it doesn't, then nothing is working. Something is wrong with the world. Damn it. Why does this happen? Seriously? Can we just... Oh, I'll fucking break something. I can hear clicking, but I can't hear my voice. Oh, I can hear myself now. Okay. Let's just repeat everything I just said, because why not? The indicator is not a end-all be-all signal to go long or short on a break of a trend, or on the black or white candle. White candle is indicative of the MA of the RSI crossing above the moving average 5, and the black candle is indicative of the RSI crossing down below the moving average. So that's all that is. But if you draw a trend line like this, it's so quiet. Let me just turn this up then. It's like I'm whispering over here. Breaks the trend. I'm going to test it for a minute and see if I can hear myself. I've got my volume turned up pretty much all the way. Still wondering why I'm not loud enough. It's like I'm whispering over here. There we go. Breaks the trend. I'm going to test it for a minute and see if I can hear myself. I've got my volume turned up pretty much all the way. Still wondering why I'm not loud. Okay. Oh. Okay, I'm good. Here we go. Starting over. I'll just have to tell people who are coming in to come in 12 minutes into the video to hear everything. So, the indicator is an indicator that I made that uses the RSI. I'll go to the actual Pine script because I don't care if people know about it. The long is the RSI 30, and the SMA is a 20 based on the close of the RSI. So it's not exactly the 5 MA and the 14 RSI. It's the best. I mean, it's about the same look from here and here. But whenever I made the indicator to make the candles black and white, I had to change the moving average so that it was based on the RSI, because every stock has, let's say Amazon, the moving average 5 of that is somewhere in the 2000s because it's a $2,000 stock. So I had to get that moving average on a scale of 0 to 100, whereas with the original, having the MA on the RSI chart, it just moves along the chart kind of in its own way. I mean, here you see that the RSI breaks above on this just plain moving average and RSI. So it breaks above here, it goes a little bit lower, but then let's say you did get long on this day at 25.80, and it goes all the way up to the 100 EMA at 30. So from 25 to 30, that's about a 20% move. Yeah, something like that. It's maybe 15. It's a lot, just based on when the RSI crossed above this MA. So I decided I'm going to make an indicator that tells me when to buy. And if you see here, the white candle comes after the MA, or the RSI crossed above the MA. So you buy here at 26.25. You sell it whenever it reaches the 100 EMA because you like taking profit. You even have a confirmation right here that it closes above the baseline. Let's see, close 27.69. It was right on the baseline. It was like right there. And the next day, it closed above it for real. So that was the confirmation you could buy, and it would go up still. So the baseline of the Ichimoku cloud is another thing that I like to use for my trades. If it closes above the baseline or below it, you know that the action is going to go that way if it confirms. Just like in here, how there's kind of a bear flag going, and it closes below, it closes above, below, 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 and then it closes lower than all those days. So then boom, boom, it goes down 2 days in a row. It's, not because of the baseline, but it's a very good indicator that it's going to do that. Okay, and I only use the baseline. I don't use the lagging span, the cloud, any of that stuff. The baseline, that's all I need. That's all you really need to make a play. So with the indicator, with the black candle here, you draw the trend line, it prints a black candle, it's going to go down because it's not only broken the trend line, but it's now printed a black candle. So it goes from 29.48 down to 28.60 in a day, 3%, drops lower and lower, and then we get this white candle, which eventually is confirmed by this green candle closing above the baseline. In a few days move up, hit this longer trend line, and yada yada yada. So the part I was talking about earlier is whenever the indicator closes, using just the closing price of, let's say, this weekly chart, you go here, you draw your trend line, usually for me I will use the top of whatever. Let's just go up here all the way back, so back up to that highest close up here, draw this trend line straight down, and it's getting tighter and tighter as we go, and finally, for the first time since June, quite a while ago, September, so we get another white candle breaking above the baseline and closing. Very long downtrend in this stock. This whole area here is supply, or demand rather. From the bottom of the bottom wick of this candle to the opening price, that is demand. I think I'm getting that right, but yeah, I'm pretty sure it's demand. I get them confused sometimes, but you see that this area has been touched several times, and it's getting tighter and almost ready to go. So I drew my fibs, and the way I draw them is using the indicator candles, the closing prices of them. So we have this highest close here, most recent, and then this lowest close here, and then we get, the 618 is where we opened up on Friday, and the green candle, not quite piercing through this bearish engulfing, but still closing above that long trend line. Let me go to another stock. We'll just go do ES, since futures are actually active right now. Sometimes, it's with Fibonacci, it's like people just use the top and bottom, and then that's like the standard practice of using Fibonacci. But with me, I kind of make it fit so that the levels make sense in a recent time frame. So back here, whenever we broke through this 618, you also see that it's the baseline here on the 8-hour chart, and we went upwards, so that makes sense. The 618, we close here, on this 8 hour right above it, and then we don't confirm above on the second candle, so we go lower. It's just, I don't even know how to really teach that. People do fibs all kinds of different ways. I do mine a very different way. But when it came to Tesla, it worked. And that's pretty much all that matters, is if it works, it makes you money. If you go to this on the daily chart, the day that I posted this, it was this day on the 3rd, we were gapping up to about 889. And I said, if we break through 889, we'll see 960. And I think we'll drop after that. But if we do break through it, we'll go up and touch 1004. So we never broke. We got up to 968, and then it failed very quickly towards the end of the day, and it came down. And the next day it was down 17%. Obviously, the options for Tesla were very high implied volatility, so it was literally 5,600 for an at the money put this day at 960 whenever I screenshotted them. Like I said, I didn't trade them, I just looked at them. Then the next day, those puts would have been $26,000 based on these levels. So it's all about just doing something that works for you. And yeah, my system might not work for everybody, but it works for me, and you gotta find a way to do it your own way. So one thing that you can notice here is that it's staying above the baseline. It's always above the baseline. Just keep buying above the baseline. That's pretty much it. It comes down here. I didn't even realize that day that we had dropped and touched that, but I knew once we came back above 703, we were going to go up. So I played, I want to say it was around when it was 735, and I bought a $900 call, because I'm like, yeah, I could totally go back up to there. And so it went back up to, I want to say 755 or so was when I sold it. It was like a 200% play, and it went up to like 650 later on from my initial buy price of 1.3. So it's even on a very volatile stock like this, it's important to keep your rules, such as, like where to buy, why to buy, and what do you do when it goes wrong? When do you cut? In this example, that we opened up down here, we came down, we engulfed this previous candle. That's not why I bought it, but it's, it happened, and then it went higher, and now it's chopping sideways. And I told my guys it's probably going to keep going up, probably back to 889, and if it goes through 960, it'll go to 1004, and we'll see. I mean, it can just keep going up until it goes down, and then once it breaks below the baseline, that will say, okay, now it's time to sell or short it indefinitely. We go to the EMAs, and I have, on my WebBull account, I have 5, 8, 100, and 200. I think a couple other, 34 and 50. But the 8 is a pretty important exponential moving average. Did this close below it? 558. No, it closed higher, but it was a green candle still. Yeah. So every time we close above the 8 EMA is another good signal that we're still in an uptrend. You see down here, when we touch this 382, we opened up down below the 8 EMA, but we still closed above it. And the next day, we gap up to 2.85%. That's what we close at. The next day, 3%, right under the 618. Still closing above the 8 EMA all the way up. Even whenever we dip down and we close above it, it's still another signal to buy. We dip down, close below it, and it goes up. Up, 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 and down here we open up below it and close above it, and now we have an inside day after it. Inverted hammer or hanging man, whatever you want to call that candle. It's an inside candle, and if it goes higher or if it opens up above it, it will likely go higher through these fibs. So that is the 8 EMA and the baseline explained. Very good indicators of trend strength. Now if we go to eBay, this is one that I found using the 200 EMA. So we can get rid of pretty much everything else right now. We'll turn off the indicator, everything. So going back to the weekly, the 200 EMA is a very strong indicator. It's better than the 200 moving average, but it's not as popular because it's not on CNN. So that will kind of hinder how much people will use it, obviously. So everybody's into moving averages, regular moving averages. I'm into exponential moving averages. It's one of the first things I ever used to chart, and coming back to it, I've seen how strong it is. So we got the black line here is the 200 exponential moving average on the weekly time frame here. Every time we hit it, we bounce on this particular chart. So whenever we double bottom here in 2016, we go up 7%, 15%, 2.2% in a month. That's about, if you buy on the bounce of it at 23.87, you go up to 31. It's almost a 50% move in a month. So we came over here, printed a black or a red candle, and then we were, if you go to the daily, they had earnings, it came down, it bounced, inside day up. Oh wait, it wasn't inside day up. It opened up here, and I bought around the time it back tested the close here, because I figured it hit the weekly 200 EMA, it's going to go up. And then somebody announces the Intercontinental Exchange, or the ticker ICE, announced that they were in talks to buy them, so it spiked up 10%. So I sold one of my calls immediately for the profit, and then profit plus original, and then I held the other one thinking this is going to go way high because it hit a certain line. Then if you go to ICE, because you'd have to understand why they didn't buy it, you go to the daily 200 EMA. Look at that. They have earnings, they drop below it, they close above it, and the next that night they announced that they're not going to buy eBay anymore, and they gap up 2.8%. Good for them. So they're crooks, and they're crooks who follow the 200 EMA. It's a very powerful indicator. Even if you make a basic pattern here, looks like a bear wedge. Doesn't act like a bear wedge. And this is back in December when we hit the bottom, and we bounced off of our correction. Bear wedge, breaks above, goes higher. All this chop around the 200 EMA. 200 EMA. Every single time. Yep. It's a pretty precise indicator. It's one of my favorite. Even going and playing chartgame.com, you can use the 200 EMA and make $1 million in no time. ALGN, another one. I used the Trend Spider scanner to find this one, and I was looking for stocks that had touched the 200 EMA, and we had a quadruple inside day here, and it closed above the 200 EMA. Now, after this power earnings gap, trademarked by Stewie, it kind of came back here to retest these areas, and it bounced. So the day I looked at it, it was here, and the next day it gaps up, comes and retests the 100 EMA, which is just the 4-hour 200 EMA, and went up 4.28%. The calls tripled, I believe, for a few weeks out, but they're a little high priced for my liking. So yeah, that's the 200 EMA, the indicator, the Ichimoku baseline, Fibonacci's. That's all I use. That's all I need. That's all anybody needs, but it's, if it works, it works. If you have any more questions, I mean, you can ask them now. You can ask them after you watch this video. If it's not recorded, I'm going to break my computer. Just kidding. But it should be recorded because everything I'm looking at says record. As far as things that I expect to happen, I expect that we keep going up. I said buy the dip at 3308. Because it was a 4-hour level, I believe. Oh, I don't have the indicator on. It was an 8-hour level. This right here is where I set my my Fibonacci at. So as soon as it hit 3308, I was like, time to buy this dip. And sure enough, it kept going up. And I'm going to check on investing.com what it is at right now, since I don't have current anymore. It's still 3324, but it did get up to a little bit higher than that. Back up to green, so that's really all that matters. Yeah, I mean, I'm having a good week. Hopefully it goes into next week, but like I said, the market should keep going up. Here's ES. It's above the 100 EMA, which is the 4-hour 200 EMA. We go to the 4-hour, it's the 200. So that's why I use the 100. And then on Webull I have the 34 and 50 because they're also lower time frames, 200. Goofy numbers, but they work. AAL, Netflix, and Exxon. Oh yeah, CL. That was another one that I was watching because it dropped on open at the open. So we go to crude oil futures now, and they're only down 0.4% compared to the over 1% they were when the market opened, or when the futures opened. And it's an inside hour up on a back test of a channel break. And the kicker is, if you go to, I believe it's quarterly? No. I don't know what's telling me to buy this. I think it's intuition. Let me just look at the daily. Okay, so earlier in the video, I pointed out that the basis of the indicator is a moving average 5 laid over top of the RSI 14 chart. All you do is you add a moving average. Okay, that's nice of you. We'll just take it off. Add a moving average, and then you click more, move to existing pane below, and it will overlap on top of there. Change it to a 5 because 9 doesn't mean anything. Make it whatever color you prefer, and there you go. That is the basis for the indicator. And as you can see, breaks the trend line back in January 8th, crosses down hard, and it goes lower ever since. almost like magic, but it's not. If you just sit back and buy time, you buy you go short on CL and you get 900 ticks, you're up $9,000. Wait, that's a lot more than that. $10, 900. No, it's like $9,000. But whatever. So I think it bounces here because we break this channel, we backtest, and then also the RSI is a hard cross above the moving average here. So we're double bottoming at this point. We might go as low as 48.28 on CL, but then I suspect we'll bounce up to 53.93 area. See how we handled that. Eventually touch these exponential moving averages and probably just go lower, because why not? Because this, I mean, it does look pretty dark here on oil, but we'll see. I just need the plays to work out in a month. I have Exxon long. Alrighty, well, I'm gonna head out. Just DM me on Twitter or in my Discord, and I'll try and help you as best I can. Thanks for watching.